This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
43rd record. That's how many times the S&P 500 has closed at a new high this year. And tonight we'll hear from the chief investment officer of the nation's second largest public pension fund about how he's investing in this market.
Key vote for Keystone. The Senate, in a test of political power and prerogatives, fails to pass the controversial pipeline. But the debate pitting business and environmental interests is sure to rage on. We'll sort it out for you.
Home sweet home. Why some say the future is bright for Home Depot, despite mounting costs from the data breach. We have all that and more tonight on Nightly Business Report for Tuesday, November 18th.
Good evening, everyone. Thanks for joining us. Baby, it is cold out there across much of the country, but not on Wall Street. The market's still smoking hot as the Dow and the S&P 500 rose to fresh all-time highs again today. The healthcare sector got a lot healthier. Home builder confidence shot up last month, and optimism grew after policymakers in Japan and Europe signaled they're ready to stimulate as needed. Here's how things looked at the closing bell. The Dow up 40 points off the highs of the session, but enough to notch the index's 26th record close of the year. The Nasdaq was up 31 points and is now less than 350 points away from its all-time high from the year of 2000, March of that year to be precise. And the S&P 500, after 5 consecutive days of moving less than 0.1%, broke out a little bit today, up 10 points for its 43rd record close of the year.
More now on Wall Street's optimism over Japan. Prime Minister Abe announced some game-changing decisions aimed at lifting his nation's troubled economy after it unexpectedly dipped into a recession last quarter. Kaori Enjoji has more from Tokyo.
Japanese Prime Minister Shinzo Abe announced today that he was postponing a decision to raise the consumption tax from 5 to 8%. That decision was originally scheduled to take place in October of next year, but the Prime Minister saying he has delayed that plan another 18 months, so April of 2017, given the recent weak economic data. GDP out earlier this week showed that Japan is now technically in recession, and the Prime Minister says the economy is not strong enough to weather another consumption tax hike. At the same time, the Prime Minister announced that he will be dissolving Parliament later this week on the 21st, which means the election will be held sometime next month. Most analysts believe that date will be December 14th. Now, technically, the Prime Minister can postpone a decision on the tax hike and not call for a snap election. That's why many of the political analysts have said that this decision was an attempt by the Prime Minister to solidify power within his own LDP party, some of whom may be opposed to the structural reforms that he has tried to embark on over the last 2 years as he tries to roll out the Abenomics phase. So this election, widely expected on December 14th, the opposition is not a viable threat at this point, but some political watchers say it is possible that the ruling LDP might lose a supermajority in the parliament but hold on to the majority that it holds in Japan's diet. That's the latest from Japan. Back to you.
Thank you, Kaori Enjoji in Tokyo. Tyler?
Well, while Japan battles to get out of recession, a warning today that the Eurozone may be heading into one. Its third since 2008. That's from the chief economist at Standard & Poor's for the European region, who said that the Eurozone is in danger of a triple-dip recession unless the European Central Bank begins buying up sovereign bonds like our own Federal Reserve did here in the U.S. And yesterday, as we reported right here on NBR, Europe's top banker Mario Draghi did say he was open to bond purchases, among other unconventional monetary tactics.
Our market guest tonight says there are some good investment opportunities in Japan. He's Christopher Ailman, Chief Investment Officer for the California State Teachers Retirement System, also known as CalSTRS. Chris, nice to have you with us. Let's start talking about Japan. I understand that you recently upped your investments in Japan by, quite a lot. Tell us why you see opportunities there, and should individual investors put some of their money in Japan stocks?
We think Japan's going to be an interesting growing region. It has really stagnated, and as you just reported, the economy is in very soft shape. but we think it has an opportunity to advance going forward better than the U.S. does. But I would caution people they really need to hedge back into the U.S. dollar and hedge the yen exposure.
What about Europe? Are you taking any nibbles there, Chris?
You know, Tyler, we are taking nibbles, but in the distressed debt and in bank loans, so areas that the average investor can't invest in. They're more private transactions. I wouldn't be very aggressive yet in some of the broad index funds across Europe.
You know, it's interesting that you said that you are, investing in Japan because you think there's more opportunities there than in the U.S. And we just reported that more records in the stock market. The S&P is 43rd record for this year. What is your thinking about the outlook for U.S. stocks?
Well, what you have to understand, Susie, in our portfolio is we have a very large exposure already to the United States, over $70 billion. So we're going to hold that as our baseline exposure. And when we're allocating, taking the cash that we had from the start of our fiscal year and investing it, that's where we're looking for opportunities. We think the U.S. market has still got some legs behind it. The tailwinds behind the market are slowing down. Obviously, the Fed stimulus coming off, corporate earnings are a little bit tougher, but with stock buybacks, we think the market still has some advance. There aren't any headwinds yet, so we still think the U.S. is a good place to invest.
As a percentage of your total fund's assets, what does that $70 billion represent? Is it 70%, 60%, what?
Tyler, it is, to get complicated, but it is 70% of our global equity portfolio, which is about 55% of our portfolio. But in big terms, the U.S. rarely represents about 2/3 of our portfolio. Foreign investments only about 1/3.
And how much of that U.S. equity portion is in index funds? And would you recommend a similar approach for individual investors? In other words, if you're 80% indexed, should the average individual investor similarly be 80% indexed?
Yeah, absolutely. Our portfolio in the U.S. is 70% index. We follow the Russell 3000 index, and we very strongly encourage that for the average investor. There have been numerous studies, most recently work out of MIT and Harvard, that show that active managers will beat the market, but net of fees and net of transaction costs, they actually trail the market. So the average active manager has a real tough time in this time period, and we think that investors should take advantage of getting market-based returns.
Mm-hmm. You said 70% in the Russell 3000. What about the remaining third?
The remaining third is active. It still mirrors the Russell 3000, but we use active management when it comes to small cap equities. We think that's an area where active management can add some value and has shown over time. And then we do invest with a few activist investors that are trying to go in and change the corporate governance of companies and improve them over the long term.
Anyone in particular?
We've invested with Nelson Peltz. We've invested with Relational. We do not invest with some of the people that have tended to grab headlines. We want to do it in a more constructive way to try and help companies improve rather than go to battle against companies. Fascinating
conversation. Thank you so much. Christopher Ailman with CalSTRS.
Well, a milestone vote in the Senate tonight, a bill that would resume construction of the long-delayed Keystone XL pipeline, bringing crude from the oil sands of Canada through the U.S. to refineries along the Gulf Coast, has failed. It was a closely watched vote that was not only a test of the president's political power, but one that put a spotlight on which branch of government has the power to greenlight the project. But the issue is far, far, far from over. John Harwood joins us now from Washington. John, the Senate has just voted down the measure. It fell one vote shy, apparently, of what it needed. What happened and what happens next?
What happened was that Mary Landrieu was scouring her colleagues over the last 48 hours or so, trying to get that 60th vote. All 45 Republicans voted in favor. 14 Democrats, including Mary Landrieu, were in favor as well. That got to 59, and she went after people like Angus King, the independent from Maine, Chris Coons from Delaware, Tom Harkin from Iowa, Dick Durbin, the Senate member of the Senate leadership from Illinois, all the potential prospects, but they've gradually been coming in and saying, no, I'm not going there. Jay Rockefeller, the outgoing senator from West Virginia as well. What happens next is that Republicans are going to bring it back up early next year. Mitch McConnell said that right after the vote, and I expect that they will have 60 votes then.
So what happens to this pipeline? Is the government eventually going to okay it?
I believe so, Susie. I think that, first of all, they will have the votes to pass it in the new Congress. Then the president, if he has not finished the administration review, he could veto the bill and then try to look to Republicans to make some sort of a deal when the review has taken place, or if it's done by then, make a deal with them at that time. Republicans have been pushing the Keystone for a couple of years. The president isn't really against it, but he's on the fence about it, not particularly in favor of it either. So he may try to make some sort of bargain with them for infrastructure money or some other concession, and we'll see if they can strike that deal.
Was this result a surprise, John?
It was a surprise. After the momentum that Republicans had in the midterm elections, the fact that Harry Reid scheduled this vote to try to give Mary Landrieu, who's fighting to save her seat in a runoff in just a couple of weeks, made you think that perhaps the votes were there to give Mary Landrieu what she was after. Now she's empty-handed. She was unable to push this across the line. Her Republican opponent, Representative Bill Cassidy from Louisiana, sponsored the House bill, which passed. So he is already out with a statement saying, I delivered, she could not.
All right, John Harwood, thanks very much. John reporting tonight from Washington.
We turn now to some news about the economy. Inflation picked up a little bit in October, at least at the wholesale level. Producer prices rose 0.2% last month, mostly because of higher prices paid for autos, pharmaceuticals, and food. The government report on consumer prices is due out on Thursday.
More now on that rally in home builder confidence for November. We mentioned at the top of the broadcast. The National Association of Home Builders reports that expectations for future sales and buyer traffic both improved last month. Those two measures propelled its sentiment index to close to a 9-year high.
One company that benefits from a strong housing market is Home Depot. The home improvement retailer saw profits and sales rise, but investors are still concerned that the chain can't yet account for all the possible losses from a recent massive credit card data breach. Home Depot shares were the biggest decliners in the Dow today, falling 2%. Courtney Reagan has more on Home Depot's earnings and what's next for the retailer.
The world's largest home improvement retailer turning in a mixed third quarter, but analysts aren't worried. Home Depot's earnings missed expectations by a penny as the retailer tries to determine the total cost of the recent data breach. Revenues matched estimates, and sales at U.S. stores open at least a year grew by nearly 6%.
I'd say there aren't many retailers right now who are putting up a combination of growth in-store traffic, growth in online, and gross margin expansion, along with SG&A leverage. These are all factors were featured in Home Depot's report, and we think that continues.
While the housing market has certainly had some level of recovery, there is data to suggest it may be slowing. But Home Depot's new CEO, Craig Menear, said the company continues to see a recovering home improvement market in the U.S., noting rising home prices and home turnover as drivers of growth. Home Depot has accounted for $28 million in expenses related to the data breach, where hackers stole details from 56 million payment cards and 53 million email addresses. However, the ultimate cost will likely be millions more. The pay for individuals working around the clock on fixing this problem hasn't yet been captured, and the company disclosed 44 lawsuits have been filed as a result of the breach. But fortunately for Home Depot, the shoppers appear to be less scarred than shoppers at Target after the discounter announced a breach late last year. In fact, Home Depot is pleased with results so far this month.
The company remarked that they saw impressive results in November to date, and that suggests that, at least over the last few weeks, consumers have been out feeling confident spending, and I think that probably bodes well for the holiday.
The largest seller of Christmas trees in the world says it's ready for the holiday season, stocked with an assortment of gift items and holiday decor. For Nightly Business Report, I'm Courtney Reagan.
And still ahead, money has been pouring into the consumer staples sector recently, but not all stocks in the group are created equal. Find out which ones are more equal than the other.
The sudden burst of wintry weather affecting much of the nation is creating a lot of problems for drivers and for cities trying to clear streets. On the heels of last year's long and snowy winter, municipalities are already facing a 1-2 punch of road salt shortages and much higher prices for the road salt that they can find.
Well, road salt isn't the only thing moving up in price, so are shares of consumer staples, those tried and true household products found in most kitchens. In fact, the sector hit an all-time high today. So which companies have moved up the most and what's next for the sector and some selected stocks in it? Morgan Brennan has more.
They may not be the sexiest stocks, but the staples are stable. After lagging the broader market all year, the sector is 3% higher this month, the top gainer in the S&P 500. The biggest winners, Whole Foods, Archer Daniels Midland, Mondelez, and Walmart, all boosted by solid earnings.
I think it'll be an improving 12 months for your old, steady consumer staples companies, particularly related to those factors, gas and food prices.
Experts note these are more defensive stocks, less prone to volatility, with decent dividends that have made them more attractive relative to bonds. But the sector now looks expensive, and investors would do well to pick stocks individually. Analysts expect cosmetic companies Avon and Estee Lauder, both down big from recent highs, to surge over the next 12 months. And chocolate maker Hershey might sweeten a portfolio.
For the kind of growth they can show next year and the kind of increase in earnings I could see happening, I think it represents a very good value for what's just generally a high return, great brand business.
Companies catering to millennials have fared the best. Names like Monster Beverage, Keurig Green Mountain, and Whole Foods, all of which have been outperforming older, more established players like Coca-Cola, J.M. Smucker, and Safeway. But all of these consumer companies do face headwinds, particularly from a stronger U.S. dollar. From Walmart to Costco to Kellogg, many are already negatively impacted by currencies. Still, experts aren't too worried just yet. After all, as long as there are kitchen sinks, these companies will have products underneath them. For Nightly Business Report, I'm Morgan Brennan.
SunEdison is adding some wind-fueled power to its business, and that's where we begin tonight's Market Focus. The company and its subsidiary, Terraform Power, are buying privately held First Wind for almost $2.5 billion. First Wind develops and operates wind farms across the U.S., while SunEdison develops solar power plants. Shares of both companies surged today. Sun up 29%. Terraform rose almost 27%. Medtronic posted earnings and revenues that matched estimates. The medical device maker also said its full-year revenue will come in at the upper end of its forecast. Separately, the company says it still plans to buy Ireland-based rival Covidien in a deal that will likely cut its U.S. tax bills. Shares climbed almost 5% to $72.47. TJX Companies, this is the parent of TJ Maxx, Marshalls, and Home Goods, reported sales that missed expectations, and it lowered its full-year earnings outlook. It blamed unusually warm weather in Europe for the weak sales. Still, shares rose 10 cents to $61.64.
Dick's Sporting Goods says its profit dipped in its third quarter because of weak demand for its golf and hunting gear. The retailer managed to post results that met Wall Street estimates, but same-store sales rose less than expected. That sent shares down a fraction to $47.10. AstraZeneca updated investors on its promising product line, sending shares higher there. The drug maker is betting on new cancer drugs to help drive long-term revenue growth. It expects to bring 6 cancer drugs to market by 2020. That stock up 2% today, $73.98 the close. Lazy Boy, my favorite shares, posted better than expected second quarter net after the closing bell. That sent shares initially higher. The furniture company also hiked its quarterly dividend by 33% to 8 cents a share. Now, the stock spiked right after that announcement. Before the close, though, shares reclined slightly to $22.58.
A ruling today about which federal agency regulates the use of drones. This after more than 1 million of them have been sold worldwide in just the past few years. The National Transportation Safety Board ruled that unmanned remote-controlled drones, as well as model planes, are types of aircraft, so they fall under the jurisdiction of the Federal Aviation Administration.
Well, those drones may have a lot of company in the skies. A standoff in contract talks at the Port of Los Angeles and Long Beach has turned into a boon for the air charter business. Jane Wells explains.
The situation at the nation's largest port complex is going from bad to worse.
It's bad for the whole economy, not only for us, for the customers, for deliverers, for everybody.
Bargaining between the people who run the shipping companies and the people who move their goods has been going on for months, leading to long delays at the most important time of the year for retailers.
Of the $22 billion in annual retail sales, half of those occur within the fourth quarter. And in fact, 35% of all toy sales happen in the 5 weeks leading up to Christmas.
Adding to the congestion, truckers have staged a series of strikes protesting working conditions, which force them to remain independent contractors.
But one industry's pain is another's gain, and retailers who can't wait are shipping some of their goods by air for about 10 times the cost.
Air cargo rates have already been on the rise due to higher demand. The Toy Association says shipping a container by sea can cost $6,000, by air $60,000. Atlas Air, which has the largest fleet of freight 747s, already had double-digit growth before the port slowdown.
We've seen prices probably increase, spot prices in the market increase 25 or 30% on very short notice.
It seems increasingly unlikely that Santa will arrive in the form of a mediator to settle the port dispute and unclog the backlog in time for the holidays, making it a very Merry Christmas for those with airborne sleighs. For Nightly Business Report, Jane Wells, Los Angeles.
Coming up, want to know the best places in the world to launch a startup? The answer may surprise you as Global Entrepreneurs Week starts into full swing.
Safety regulators are calling on automakers to issue a nationwide recall of those Takata airbags. The decision is based on new information surrounding an incident that took place in North Carolina and expands the original recall that had been regional. The acting head of the National Highway Traffic Safety Administration says if Takata and car makers fail to work with the agency, quote, it will make them do so. Takata's global chief of quality is scheduled to appear in front of a Senate panel Thursday.
Here's a report that might infuriate a lot of taxpayers. 7 of the largest corporations in the U.S. paid more money to their CEOs, over $17 million on average, than they paid Uncle Sam in federal taxes last year. Now, all of that is according to a new study by 2 think tanks. They say the 7 companies took in more than $74 billion in combined pre-tax profits, but actually came out ahead on their taxes by nearly $2 billion. The companies are Boeing, Ford, Chevron, Citigroup, Verizon, J.P. Morgan, General Motors, which has already disputed the report.
Well, Global Entrepreneurship Week. It is a worldwide campaign designed to inspire the next generation of entrepreneurs, and it comes at a time when many countries are looking for innovative ways to jumpstart economic growth and create jobs. The initiative is taking place in more than 100 countries and coincides with the release of an index that measures global startup activity. Kate Rogers is here with more on the index and why it is grabbing people's attention. Kate, the bottom line question here, where is the best place to do a startup? Who's got the lead?
Well, of course, it's us here in the U.S. No surprise. U.S. took the top spot, followed by Canada, Australia, and the United Kingdom. But guys, the regions that are seeing the fastest growth are what really caught my eye in the survey. It's the Middle East and North Africa, despite all of the political turmoil that they face. And the country with the most startup growth year over year is Iran.
Well, that's good. So no China,
that's
not even
really
on the list.
Surprising.
Yeah, not in the top spots at all.
Mm-hmm. What about who's starting the companies? Are they men? Are they women? Are they older adults? Are they millennials?
Well, being a young woman, I was very happy to hear that it's women and millennials that are starting these companies, which is really interesting. And if you look at a place like Iran, youth unemployment there is at 24%. So to hear that millennials are leading the global entrepreneurial revolution is really, I think, a positive sign.
So, I want to go back. The U.S., despite all the things we hear about how it's so hard, there's so many regulatory hurdles, the tax structure is, we're still in the lead in terms of entrepreneurship?
We're still number one, and it's good to hear. We absolutely are.
Now, how are attitudes changing globally towards entrepreneurship? If countries like Iran, which are state-controlled, are hotbeds of entrepreneurship, North Africa, the same, that would suggest a big change.
The index was certainly more positive than it has been in recent years. They measure activity in 130 countries, and all of the countries that they surveyed had some kind of entrepreneurial activity. So attitudes are certainly warming. More people are excited and inspired to be their own bosses, which is fantastic. But globally, we're only at 52% of our entrepreneurial capacity, meaning we still have about 50% left to go. So it's exciting to see what will happen next year.
Yeah.
Kate, thanks very much.
Thank
Appreciate
you, guys.
it.
See a lot more innovation. And finally tonight, a new ranking of the most generous countries in the world. A group called the World Giving Index looked at things like donation amounts, time spent volunteering, and whether people were willing to help strangers. And here's what they found. In 5th place, it was New Zealand. In 4th, Ireland. Number 3, Canada. And tied for the top spot of the most generous country in the world, well, the U.S., but believe it or not, Myanmar. And apparently, Tyler, that country has a history of charitable giving, a concept known as dana, which is part of their Buddhist tradition.
And Americans, I think, are the most giving people in the world, really, the way we help. Whenever there's a crisis somewhere around the world, we jump in big time.
Absolutely. Well, that's Nightly Business Report for tonight. Thanks so much for watching us. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we will expect to see you right back here tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Susie Garrow with the Nightly Business Report News Brief. It may be cold everywhere, but not on Wall Street. The Dow and the S&P 500 rose to new records. Investors were inspired by a positive report on home builder confidence, stable inflation news, and optimism about stimulus plans in Japan and Europe. The Dow rose 40 points, the Nasdaq was up 31, and the S&P added 10 points, closing at its 43rd record for this year. Home Depot profits were up last quarter, but shares fell on worries about the cost of its recent credit card data breach. Federal safety regulators are demanding automakers recall all cars that have faulty airbags made by Japan's Takata. And the U.S. and Myanmar tied for first place in a new report on the world's most generous nations. Be sure to tune into Nightly Business Report right here on your public television station.